Welcome back to the channel. Today we're breaking down the US stock market's latest moves for Monday, September 29th, 2025. Futures are climbing after a shaky week, but investors are still bracing for three big risks: a possible government shutdown, the all-important jobs report, and new tariffs from President Trump. We'll also touch on oil prices, earnings to watch this week, and what it all means for your portfolio. Let's dive in. First, here's how futures look this morning. Dow Jones Industrial Average futures are up about 0.23%. S&P 500 futures are up 0.29%. Nasdaq 100 futures are up around 0.37%. That's a rebound after last week's losses. The S&P 500 slipped 0.3%, its weakest week since early August. The Nasdaq dropped 0.7%, dragged down by AI-focused stocks. And the Dow lost 0.2%, snapping a three-week winning streak. The biggest story this week is the looming government shutdown. If lawmakers don't strike a deal by Wednesday, the government could close. And that means we may not get critical economic data, including Friday's jobs report. President Trump is meeting with congressional leaders today, but analysts say this may be the last chance to avoid a shutdown. For markets, the uncertainty adds a layer of volatility, especially with investors already nervous about interest rates. Speaking of data, the September jobs report is due Friday, assuming the shutdown doesn't delay it. Wall Street expects 43,000 new non-farm payroll jobs and an unemployment rate holding steady at 4.3%. Last week, jobless claims came in lower than expected, and GDP growth was revised higher. That sounds good, but it also raised concerns that the Fed might not ease policy as aggressively as markets hope. Translation? Good news for the economy can actually spook markets if it means higher interest rates for longer. Finally, trade tensions are back in the spotlight. President Trump announced surprise tariffs last week that go into effect October 1st. Details are still emerging, but investors are worried about supply chains and inflation at a time when markets are desperate for stability. Meanwhile, oil prices are sliding. West Texas crude is trading at about $65 per barrel, down almost 1%. Brent crude fell below $70 after a strong run last week. OPEC Plus is planning to raise production, signaling a strategy to win back market share. The International Energy Agency is warning of a potential supply glut in 2026, and Goldman Sachs even sees Brent falling to the mid-$50s next year. Earnings are pretty light this week, but keep an eye on Carnival Cruise Line, CCL, reporting today. Nike, NKE, reporting Wednesday. The biggest corporate update of the week. The real action kicks off in mid-October when the big banks start reporting Q3 results. That's when we'll get a clearer picture of consumer health and credit conditions. So here's the bottom line. Futures are up this morning, but the week ahead is anything but calm. Investors are juggling the risk of a shutdown, the jobs report, and new tariffs, while also watching oil prices and earnings. As always, this isn't financial advice, but keep an eye on volatility, and remember that even in uncertain times, disciplined investing beats panic. Thanks for watching. Don't forget to like and subscribe, and I'll see you in the next update.